So we can look at one direct, one indirect. This is exam for practice and tell you additional information. I think this is using direct. You can do indirect. Let me look at the format that I want us to get used. Then we can do that. Is a good question. We can do numbox, or we can do this. It's all mean the same. So let me do this one. But it's doesn't, I think it will confuse you. Let me do. They are the same because all happen is that this is more summarized. The other one is not summarized. So when we give it a statement like this, and I didn't explain, this has detailed of a lot of things, but you can see in the end, there is profit after tax or profit before interest and tax, which is the beginning point. And we say we can always convert direct to indirect because the only thing that changes is the cash from operating activity. Everything else remains the same. How you determine the amount that in the investing activity and in the financing activity remain exactly the same. So whether it's an indirect or direct method, so the only part that would change is how you determine your cash from operating activity. So in the olden days, we would to say, give you a figure like this. This is a more detailed one. You see it as opening purchases, what? So we can tell you to do a direct or do an indirect and then do a reconciliation. Yeah, probably that is why it's more detailed. But I think let's do numbox. There's no record. It's over summarized, so it will be very difficult. And this is a loss is also a different thing. So here we have been given numbox, which is as a number of subsidiary. One of these is Zbox, which was acquired during the current financial year. And the draft consolidated financial statements for the year ended June 2014 and the balance sheet of as at the date of acquisition are provided. So this is a consolidated statement, income statement or statement of profit and loss and other comprehensive income. You can see they made a loss, financing costs, they had interest expense. In the end, they had a loss for the period of 555. When they come to apportioning, you can see this is equity or the group took a big share of 575 up over and above the total, and NCI. It means basically what it means is that if you look at it, NCI was profitable, but the group was loss-making. That's why you find there is some profit attributable to NCI. Don't know why I think at the time, but this was 2014, it was still NCI. If it was 2008 and backward, they used to be called minority interest, but it doesn't matter. It means the same thing. So we have seen they made a loss, and then we go here, they get the statement of financial position. Both there, this is the last year and this year, and the Zbox, the one that was acquired during the year. Remember, they have said it has a number of subsidiaries, except that for one of them was acquired during the current financial period. And then tells you a number of things here. So ideally, I always tell the student, the first thing is, this is one. You can see now this is what I'm so saying that prepare a consolidated cash flow statement with a note reconciling profit before tax to cash generated from operation for numbox for the year ended. And your answer should be in accordance with cash flow using indirect method. So that's what we are going to do. So ideally, we have said we need to do a statement of cash flow. So a statement of cash flow, basically, I say, if you have read my notes, it says, whenever you are told like this, the first thing you do is to do the framework. First, we always have enough paper. So you decide 1 page is for the statement. So you are preparing the statement of consolidated cash flow for Numbox PLC for the year ended 30th June. So you put the title, you put the currencies, you put the amount, and the currencies are normally dictated by the statement. So these are Namibian dollar in thousand. So you can see the currency is Namibian dollar, the degree of estimation is 1,000. That's why there are 3 zeros. So that is the first thing you do. You go and make up your frame. Let me see whether I can borrow some structure just to save us time in putting the structure together. But anyway, I can do the same thing, but I'll do, probably I'll do in shortfalls. I'll do it. Let's say this is the statement, the consolidated statement of cash flow. And sales is for Nambox. And subsidiary is for the year ended 30th June 2014. And of course, we put the currency and estimation, and then we put the structure. So the first thing is put the title correctly. I think in test 2, we had half a mark, but most of the people lost the half a mark because they were said either they did not put the date or they did not put the entity. So they said this is a consolidated statement of profit or loss or something, but we did not know for who or for when or as at when. So those are important things. So you must say what statement it is, whose is it for, and for what date or what period. Those are important in the title. Then the currency and estimation, we have said is Namibian dollar. Let me just, don't take my shortcut, I'm doing it for. And then we have said ideally, cash flow has 3 things. So we are saying cash from operating activities, which is the main thing, and I don't want to show a separate thing. Ideally, you could put a working and put it elsewhere, but we can do that. Then let's say, then we have cash from investing activity. You could start financing if you like it from investing activity. Then we have cash from financing activity. Then we have net cash. And then we have opening cash balance. And we have closing cash balance. Ideally, these are the way we set it up. So I can, I put it in 2 because I want to see the net for each. That's why I put, basically I'm putting 2 columns with amount so that I can enter the amounts here, then here, then I get the total there, which will be the net cash flow. And we have said from operating activity, we'll always show what we call the tax paid, and the interest paid must be shown separately, although they are classified as operating activity. Then we have, let me put it up there, and then here we have net cash flow. Net cash flow from investing activity. That is, then the other things will do. So working from, we could call it, normally you can list them, but let me call it working one. I'll do it as a working. So basically, we have now put in the structure. So we say the structure, this would maybe one of the pages that we want to do, which is the cash flow. Let's put that is. So we have set up the structure of our answer, and we know we will be responding to the required. That's the first thing. Then we said, after we do that, we now go and read, and we transfer the amount. We go to the statement of financial position. Let me go there, because I want us to have a systematic way and get accounts for all of them, for all non-cash, non-current asset, all non-current asset, we are going to get T accounts for them. So we are going to set up accounts for those ones. Current asset, we'll call it movement in working capital. Cash equivalent is what we are looking for. We are going to do equity and All the rest, equity, all of them, we are going to set up accounts for them as a structure. And this one will go under tax and interest. We are separate. Those are the accounts we need to set up. So we are saying non-current asset and equity and liability, long-term liability apart from current asset. Then we can set up their accounts. So we have PPE, intangible asset. Let me set it up. I'll set it up as one long ledger here. What has happened now? I think. Okay. This is what I'll set up, and I'll call it different thing. So when I do one, so one we say it is PPE and intangible asset. PPE, and then we'll have another one. Let me set it here. I call it intangible asset. So those are the two accounts we need to set up. Then in terms of the equity, we have ordinary share capital, share premium, and retained earning. Ideally, we don't have funds. When it is cash, we never charge people pay for share premium. So I want to combine ordinary share, because ordinary share is because they are $1 per. If you issue them at an extra amount, it's posted in the share premium. So ideally, ordinary share capital takes care of the share premium, is the extra amount over the par. So I have the ordinary share capital, the retained earning, and NCI. Again, let me come here. I'll put the three of them. Okay, so here I'll call it the ordinary share capital, which will include the premium. Let me say stroke premium, because they are not separate. Then the retained earning, and then I have the NCI. So I've set up the structure. This is intangible asset, not intangible, not interest, and that is PPE. So this is basically like a T account. Today I want to do the T account. In the full time I did the listing. Remember, you could use the listing or the T accounts. T accounts is unlikely to make a mistake. T listing, if you are not very clear what is increasing and decreasing cash, you can make a mistake. So we have now done, remember what we have done. We have analyzed all accounts that are non-current asset and all equity and non-current liabilities. So the next thing we do is to transfer the amount. For example, the equipment there, we are saying the balance brought forward is 2,100. The one carried forward is 26. So we can do PPE. We are saying the balance brought forward is 2,100. The one carried forward is 2,600. So this is carry forward. You know how the T accounts, and then this will be the totals there. So this is the brought forward figure. So for asset, no, I put them the other way around. For asset is the other way around. We have the brought forward, and then we have the carried forward as a credit. They are credit, they are debit balances. So they will be the other way around. Apologies for that. Okay, that's an intangible asset. We do the same. We go to the figure. It's 120 and 150. So it is 120 and 150. I will leave the breakdown. So then we go to ordinary share capital. We are saying there it is 900 and 400. The brought forward. This one now, the brought forward is 900, and the share premium is 400, and the carried forward, I want to put them here, is 1,800 and 16,600. I'll put 1,800 and 600. There is because I've mixed two accounts. That's why I've brought forward. You see, it's opposite of the other one. Then we can look at the retained earning, which is 1150 and 510. 1150 and 510. And the carried forward is 510. Having done that, I think we have an NCI 324 and 311. 311. So we have basically done that. Let me put on the right. Yeah. So we have basically transferred the amount, so which is step 2. So we have taken the brought forward and the close forward. Because if you are using ledger account, it is also important because we want to look at the movement in working capital. So we could also do the same for working capital. Normally I can do it with a listing, but for the sake for us to be okay, let me also do it in the T accounts. But notice I've separated these ones from the non-current from the current asset. So what I'll do here now is to do the current asset and current liability. So let's see how many accounts we have. For current asset, we have inventory and trade receivable, excluding cash and cash equivalent. Cash and cash equivalent, we must always exclude that. I wanted to say this one, we can transfer the figure, but I'll show you how. Let me, in the meantime, we say we will exclude those are separate figure, but now we can't read them. That figure, I want to read them. Okay, and I don't want any colors. Okay, so we have inventory and trade receivable, and in the current liability, we have trade payable and tax. So we can go to our ledger. So here we have inventory, and then we can do another one. Therefore, in any case, so, and trade payable, trade receivable, and here we had trade payable, and we had tax. How many did I do? Yeah, I need to do one here for tax. We call it tax. Now we can also do the same and bring the amounts. Okay, so we go to this equipment to here. We look at inventory, 535 and 610. That is inventory. Trade receivable, 625 and 490. If we get the figures correct, copied wrong, then we'll have trouble. So we must copy them correctly. Then we go to the trade payable, 484, 508, 484, 508, 484, and 508. Notice there, they are opposite. That is trade payable. And then the tax finally, we have 150 and 140. 150 and 140. So ideally what we have done now, we have set up the entire question now, ready for answering it. We have taken the question, so we have taken the figures. What we have done, we have taken the figures from the statement of financial position, all of them. We now need to go and take the figures that goes to those ledgers that we get. So from here, So, but here we will work it out based on the adding it back. Let's look at the figures we need to look at here. This is what we always said we work from profit before interest and tax, because interest and taxes are added separately, but that we will work, then we adjust for movement. But in terms of the profit attributable for the year, we know how much profit was attributed. So we are saying in the group, they made a loss of 575, and in the NCI, there is a positive 20. So we can go to the group retained earning. So there is a loss of 575. This is the loss for the year. And the NCI, there is a gain of 20. And that is the gain for the year. So we have transferred the profit that comes from to the financial position. So we are fine. Now we can go and do our, what we always say, that we start with profit before interest and tax, and then we adjust it for non-cash item. And then from there, we adjust for the movement in working capital. So let's go and start our, did I want to put it here? I think I can put it here. Let me remove the working here. Then I just put it there. I put it as part of the table. Insert and move down. So I will work it from here instead of having a different. So ideally, we should always start from profit before interest and tax. Then we go to our statement of profit and loss and see how much is the profit before interest and tax. So if we can start here, income tax expenses, that one will be shown separately, is not a problem, but we are saying there is taxes of 30, so we can also post that 30 under tax. Your tax payable will increase by 30. We had a tax payable, which is increasing by 30. Based on this information here, that when you charge interest or tax expense, it increases the tax payable in the other side of the story. So we can start with loss before tax, which is our best starting point, or profit before interest. So here we say loss before tax. And this one, we know it is what the figure? 525. So it's an outflow, is a loss. So I've put a minus, and I want to put minus to be bracket. Or because if you put 525, it says like
Doctor?
an inflow. Yes.
Should it not be under operating, cash from operating?
Oh, it's operating. I think this one I should take it down. Yes, thank you. I think when I was cutting there, I should just put it here. Yeah. Then there will be more space here, a little bit. Yeah, it is cash from operating activity. That's where we should be dealing with it. Okay, so I start from profit before tax. Then we add non-cash item. I just want to, sorry, so then here we add non-cash item. Okay, how do we know the non-cash item? First, if there is interest, we first look at it. If this question is saying there is finance cost, which is interest, is subtracted, so we add it back, we'll show it separately. So we go to interest, we can add it back. Just even before that, we show interest. We add it back because it will be shown separately. And so it is subtracted, we add it back, and therefore we'll also, interest paid is already there, 25. When it's paid, I think my structure is becoming a mess. Let me paste. This already, I don't know whether it's paid. Let's say adjust for interest paid, which is minus 25. This is the one that we are reversing. No, it's added, so it's subtracted, so we add it back. Now we read the information to discover whether there are other non-cash items. So we go to the question. We have transferred, where is the question I'm dealing with? We have is it this question? Yeah, it's this one. We have read this one. We have transferred income tax expense. We have reversed that. So we are ideally back at 500. You could even have started actually loss from operation of 500, because this one, even if you start here or here, you add them back, then you end up at 500. So we could as well have started. The best, ideally, we start from there. If they are mixed up and they're in the information, then it makes sense. So here we basically should start there, which is minus 500. Then we don't have to add interest because it's outside there. So non-cash item, we go to the information, and the information will always be given from here. So note one, now we need to start adding, populating our figure. So we are told Numbox PLC issued one for $50,001 shares at a premium of 130, at a premium of 30 cents, in addition to paying 137 cash in consideration for 75% of Zimbox shares. At the date of acquisition, Zim asset and liability were recorded at their value with the exception of property, plant, and equipment, which had a fair value of 150 in excess of its carrying value. So based on this, you could actually work out what goodwill is, because basically what they are saying is that they issued shares 450 with a premium of 150. So how much would that have been? Times 1.3, that gives you 585. So we are saying in here, they will have recorded the investment in associate. One of it would have been the issuance of share, which would have been 585. So when you go to the ordinary share capital, you know they are going to issue a subsidiary share, which is basically 450,000 shares times 1.3, because they are issued at a premium. So this is the share that would have been issued by the parent in regard to that, and recorded it as an investment. Then investment, where would the investment would of course have been eliminated, yeah, with the equity of the share capital in arriving at this one. But what is let's work out what the goodwill is. So we have consideration. So consideration, we need to know it is shares, which we know the amount is 450,000 times 1.3, which would have increased. Then we have cash. They are issuing cash of how much? What is the cash that was issued? The cash was 137,000. And then the equipment had a fair value of 150. So we say cash here is 137. Is it 137,500? We'll check that. Let's look at the net assets. Apologies. Net assets at the date of acquisition will be represented by the equity. This is the Zimbox at the date of acquisition. And therefore, we are saying the net asset are represented by the equity, which is 699,000. So 699,000 was the equity at the date of acquisition. So we could see net asset before is 699,000, but there is a revaluation reserve that we have been told on note 1. We've been told about a revaluation. There was a 150,000 in excess of its value. So there is a 150,000, 1, 2, 3, and this is 137,000 not. So that is the total consideration. We could now know the total consideration is those two. And then we need to work out what NCI is. And the net asset, we can work out what the net asset is at the date of acquisition, which is these two added together. So it's 849. And therefore, we can work out what NCI is, which is 0.25 times the net asset here, which gives you 215. And therefore, we can see the total consideration and NCI. What happened? Should be that amount. And we can get the goodwill being the difference. The goodwill being the difference, which would be equal to this amount minus that amount. Gives us 85,250. Even if you are not given, you can calculate it. So when we come to this question, it says goodwill is 85,000. I think it's because they are using 1,000. So they have left out the 250. It's a question of estimation. But basically what they are saying, the carrying amount, the fair asset was 150 in excess. So we can go back to our schedules and know that in the PPE brought forward, we have a revaluation reserve of 150 here in thousands, and then we had the PPE that was brought forward. So we can also now consider the asset that was brought forward. So the PPE is 460. So let's go and populate the subsidiary PPE. That was before, it is 460. So we have populated that. There is nothing to do with the intangible based on this figure. So we have populated that. We can do inventory and trade receivable is 140 and 200. Inventory is 140 and 200. We did equal here. Inventory is 140 and this one is 200. And here we are saying this is the acquisition from the subsidiary. We will recognize the asset. So subsidiary is what I'm calling sub. Then we look at, so we have basically dealt with that except cash equivalent. In terms of ordinary share and the retained earning, the 699 plus the revaluation reserve will be eliminated as we introduce goodwill. So they are not part of, they are not consolidated, they are eliminated with the investment in any case. So we need trade payable is 95 and tax is 46. This is 95 trade payable and tax is 46. That is from the subsidiary. Just to be sure where it is coming from. Okay, so we have now moved all the data as far as the subsidiary is concerned, and we have applied in terms of the goodwill, the acquired goodwill of that 85. So we need to show that goodwill, which is part of the intangible, will have been, there will be acquisition of the subsidiary, which will have brought 85 there, which is will add to the intangible asset. Then we read note 2. Note, that's note 1. We have dealt with it. We have dealt with the goodwill. We have dealt with the cash. This cash that was paid as a consideration, but they also received some cash. We haven't dealt with cash and cash equivalent. So we'll deal with 137 that was paid out, which will be under investment. And the other one was already dealt with. During the year, we have been told Nambox made a further issue of ordinary share during the year. So we'll determine how much that was. We don't know, but they are already recorded. That's why we have the financial statement. Then we are told an analysis of the PPE note in the financial statement showed that equipment with a value of 400 was sold for 450 was sold for 360. What does that tell you? If equipment had a value carrying amount of 450 and it was sold for 360, then there was a loss that was recognized in the book of 90. So if we work on this, we are told the carrying amount is 450. So that carrying amount must be removed from the PPE, which is 450. And there is a loss that is recognized in the profit. So this is profit. We worked out on the loss. Where did we work out the loss? We started from cash from operation. Then we said adjustment for, I'm doing them here. There we have loss on sale of PPE. It is subtracted, therefore we add it, and is 90,000. Okay, it's just I'm confusing myself here. Just one moment. Yeah, I don't want to confuse myself. Okay, so basically I've said I started with loss, then I've added the loss on PPE, and that PPE, the item was removed, and the item was 450. That's why I have removed 450, and this is disposal, of course. And that disposal brought up a loss, which we are adding back because a loss on is not a cash flow issue. So if you know, we have adjusted that, and we have been told the total depreciation charge for the year was 600. Again, we have depreciation that is, of course, charged, which we are told is 600. We add it back because it's removed there, and here we reduced our PPE by the depreciation of 600. So again, we have reconsidered that information. Now we have the last one. And then we close up and we have our account done. So we have been told intangible comprise goodwill on acquisition and had a patent which met all the requirement under IAS7 intangible. Amortization of this patent amounted to 55,000 during the year. So again, we have another amount here of amortization which does not involve cash. So we have amortization as well, which we have been told is how much? I forgot the amount of 55,000. That 55,000 should also have removed it from there. So we credit the amortization and to the asset and charge our profit or loss. So I've recorded that. So now I have, this is 55. We are dealing with thousands. Okay, let me remove those ones. They keep not to confuse me. So these are loss on sale of PPE. We add it back. Depreciation does not involve cash. We have subtracted from the profit. We add it back. Amortization, we have subtracted from profit. We add it back. Now what we need here is movement in working capital. Okay. And then we have movement in working capital. Let me insert something there to create space. Sometimes I said, oh, this can be done in a working. Let's talk about movement in working capital. All we are looking in here in movement is all the accounts that relate to current asset and current liability, excluding the cash and cash equivalent. So we go and look at all the accounts that we have indicated as cash and cash, as current asset and current liability, excluding cash and cash equivalent. So we go and look at them, which we separated, which are 4 of them. One is inventory. So we go and close up what inventory is. For example, we look at which side is bigger. In this case, it appears that is the bigger side. So we could put 610, but this figure is less 610. So we are basically saying there is there is a balance, which is 610 minus the two figures that we have there. So this one is basically, are they more? Oh, this side is more, sorry. If we add it this way, 675. So if we put this is 675, then we are saying we have a balance here, cash. So basically you can see the corresponding, if we credit inventory, then cash will. We are saying inventory has basically reduced and therefore it increases cash with the difference, which is the difference between 675 and 610. So that amount is an increase, and therefore we go and put it as a movement in. Here we say increase in inventory is a reduction in inventory, which is equal to that gain. I want to use the 65 there. Then we do the same here. I think it's the same with 829. And therefore we are saying also trade receivable has reduced by an amount of 339. So again, 339, and that is trade receivable. That is inventory. So this is basically saying inventory has reduced, and therefore by reducing, then we are increasing our cash flow. And then we look at the trade payable. If trade payable has reduced, if inventory reduces, then we have more cash. If trade payable reduces, then what happened? We have given out more cash. So let's look at the receivable, the payable, which is here. Again, we can work out what was the 508. Was it the balance? Okay, this is a bigger figure. 579.
Sorry, Doctor.
Yes.
Sorry, sir. I don't think this session is being recorded.
It is not being recorded.
Yo.
Okay, let me check. Why didn't you remind me early? Let's see, recording. Yeah, this one we are not recording. But you are following, at least you were there. Yeah, those who are not there, sometimes that's the price they pay. So we are basically saying in terms of trade receivable, it was supposed to be 579. It has also reduced. It has increased. Is it reduced? Because now it's 508. If we had here, it was 579. Now it's 508. Trade, it has reduced. So it means we have paid more cash. So the equivalent would be an outflow of cash. And therefore, we are saying that is a movement out. So trade is a minus that amount now, because the trade receivable is the one that has reduced. So we have finished the work in progress, working capital movement, and therefore now we can do the interest paid. There's no interest payable. If there was no interest payable, we know what the interest from the amount. We know that amount straight from the statement. Otherwise, if there was interest payable, then we would have worked it the same way like tax. Tax, we can now work out how much tax was paid because we have a tax account. So we know the total here, which one is more, this side is more. They're saying this is 226, and therefore we paid tax bill, the difference that will be the tax paid. Again, that will be the tax paid, which is minus 86. So we go and get the tax paid. That is tax and interest. Did I mix them? I think I've mixed them, but don't worry. Just put them in the correct amount. Correct. This is this one not. Why is it not going here where I want? We said here, I want to say is equal to, not there. Why is it not giving me problem here? And I can type it directly. So here is saying is minus 86. So now we have finished the first part, which we have. We have the operating cash flow. We have the adjustment for item not involving cash. Then we have the adjustment for movement in working capital. Then we have shown our interest and tax, although under operating activity must be shown separately. And therefore now we can work out what the net is, which we come from here to the top there. So we now have worked out what our net cash flow from operating activity is. Net cash flow from operating activity, which is the first line. So we have finished the first item. The other item is just to finish them. Cash flow from investing activity. I'll put them here quickly, and we can start with the obvious one. There was a sale of PPE, which we are aware of. PPE, you always indicate it. It was given as 450,000. The sale is an income. Then there is another one, which is acquisition of the subsidiary. Acquisition of the subsidiary is the amount that we give out, which is 137,000, minus the amount that is in there. And the amount that is in there, we look at it from the amount that was there on the date of acquisition. The cash that was acquired with the subsidiary is 40,000. So we are saying the outflow is 137 that we paid as cash consideration, less the amount that we have received, and is an outflow. So it's a subtraction. This is acquisition of subsidiary. Okay, now any other information? I think there is no other information. We are now aware. Now we can close. Now once we close this account, everything should balance. Ideally, we can see the opening cash. We can pick that from the statement, and I always pick it from the cash and cash equivalent. There is 28 and 19. Those are the two figures that you need to do. The 28 and the closing balance is 19. So that is how, let's put it this side, because that's where we put our totals. So ideally, we know what this one should be, which is 19 minus 28. Isn't it? So we know that will be 11. Is it 11 or 9? It's minus 9. So if we have these two, should add up to 19. Yeah, but this one, we can type it. We know that's the amount. If we don't get that amount, then we know we are wrong. But let's go through our accounts now. So having done all this, now we can go and close up each account separately, wherever you want. Let's start with the asset. So the asset, we look at the amount we should expect to have and the amount we have. So if you look at here, the total this side, it is the higher side if we are doing the balancing, and that is 3650, and therefore there is a cash outflow. So if this we debit here, it means we are crediting the cash, which should be equal to the balancing figure. So we are saying there is a cash, there is acquisition of PPE, and we have a minus this amount here, which we have paid as PPE. So that account is now closed. I'll be highlighting them. We look at the intangible. Again, we can add them up. This is 202, something like that. 205, and this is 205 as well. So there's nothing to do with, although it means that is, the amount is fine. So this account has no effect on the cash flow. So again, that has closed. Then we look at the issue of shares here. So we could work out what the balance is. This was 585,000. 585, no zeros. I think we put the wrong figures in estimation. So that is the figure. Then we put this figure here. Then we find what the difference is, which is this minus those two. That is not correct. So this figure is higher this side. And therefore we are saying here we credit the account. So it is more cash coming in, and the balance will be, what is there will be an inflow of cash. So we are saying they received cash off, and that is financing. So this is shares, and they have issued shares, and that is the amount that is there. This positive is an inflow. Again, we have closed that account. Retained earning. What does retained earning tell you? Whether we pay dividends or any amount like that. Again, we can work it out. The total here is 1150, and the total this side is, so there is a balance of the difference between, which is equal to 1150 minus 1085. Yeah, so there is a 65. This is an outflow. You can see we debit the retained earning, and therefore this is payment for dividends. That's what move there. And again, we can put under dividends payments here, and it's an outflow. So it's equal to minus the amount we have worked up to be 65. Again, we have now closed that account. Now we only need to close NCI. NCI, I think this is the bigger side. And we can say the balancing figure is an outflow, which is equal to the difference between this and that, which is 33. So we have payment to NCI. Again, we can put that under, which is equal to a minus 33. So again, we have now closed this account. And if we now close up our account, we have closed everything else. We closed the inventory, we closed the trade receivable, the trade payable, we worked out what the tax is, and therefore we have now closed all the workings. Now all we do is now balance out this figure. So we can work out what the net is. Let me just remove a lot of spaces I added. I can add up what the net is there, which is the net of those two. And I can add up what the net is here of this, which is the net financing activity. And then we can get out what the difference of that two is. If we want to get the net, which should be, is that correct? This is minus, minus, positive. This should be, this amount should be 900. If we add this, 900, how come this is 940? Share of PPE, the sale of PPE, this is positive. Acquisition of subsidiary, the net outflow, PPE here. Intangible assets, there was nothing there because this is the acquisition under intangible. Issue of shares, we put the inflows there. Dividend paid, non-controlling interest paid. I'm not sure this trade receivable. I want to look at it. The trade receivable, we had a balance of 485. Is 71. Where are we getting the trade payable? I have 71. Where am I getting? And 339. There was 490 and this too. So what happened? Trade receivable, we had a 629. Let me look at that because it's happening like 800. I want to look at the financial statement. Trade receivable, we had the opening balance of 625. The payable is the closing balance is 490. And we had another figure of 200 from the subsidiary at the date of acquisition. So it is 200 plus 600. That's like 800, looks fine. Inventory, 140 plus this is about 680, a little bit more, which is fine. Looks okay there. We are trying to see why our figure there did not balance. So this is appears, these are fine. Those ones appear okay. These ones appear fine. We've worked them up. Depreciation was how much? Let's read the question.
Depreciation was 600.
Depreciation was 600,000 from the word go. It was in which note? Yeah, depreciation was 600. The other one is 440. So let's look at the PPE, whether we put this is depreciation is 600, disposal is 500. The sub asset was 460. The balancing figure, how did we work out the balancing figure? The carried forward, we got 940. That's look fine also. Ordinary share looks fine. Retained earning, this is a loss. Depreciation, amortization, we add it back. Loss of PPE, and this is 500 or 69. Why are we having, it's having a big difference here. Let's see what the net is. 297. NCI, I need to check what is NCI. We had NCI opening balance. What was the addition? No NCI. What is 311? We want to look at NCI in the financial statement here. 324 and 311, and then there was the additional NCI. How much did we get the additional NCI? From our calculation here. NCI, this one, 212. Okay, this is where we are. We missed that one. You see, we have NCI, the one initial recognition. This brought forward, this is carried forward. We have initial recognition, which is this one, 212. Let me put it 212 here to the best of my. So if I put it 212, that is 245. 212 is the acquisition brought forward, and this would be 556. So NCI is minus 245. Now I think it's fine. I don't know what was happening, but I think it's correct now. Is it not correct? The net cash flow, let me see what the net is. We'll pick it up. It should be that plus that plus this. we have a difference of some amount of with 9, like 95.
The goodwill. Isn't it the goodwill?
Why the goodwill is, we didn't add it, we added the goodwill here, acquisition of goodwill.
Well, okay, I see, yes.
Yeah, we added the goodwill here because we had, where was the brought forward? We had 120, the goodwill, and we have amortization of 55, which we put in here. So goodwill is there under intangible, which it's not the one causing the effect. But should not be an acquisition. There is nothing on imports. Oh, let's see. Interest paid, was the interest, oh, that was tax. We interchanged here. That was tax because we worked out 140, 150. Yeah, tax is 86, interest is 25, which is fine. So where is help me find where do we make an error? I think this is NCI is fine here. Dividend is fine, that is fine. 940, 97, acquisition of a subsidiary, fine. Sale of PPE, I think they sold it for 400 and how much did we, the amount they received, that is where we are having proceed. This is the carrying amount, but we needed to put the amount that they received.
585.
Yeah, we are supposed to have received our amount, which is 360. The equipment was sold was for 450, but we received 360. Yeah, that is one. That was a mistake there. Anything else? Again, you can see here we are now having a difference of 4. Where do you think the 4 is? Okay, you must help me find out. The loss is fine. Sale of equipment, so that was a loss. This was depreciation, that was amortization. We add them. Inventory is 65. If we remember, yeah, it is 65 because there was this and the balance, this and the balance. Tax is fine. 226 is okay. Here is fine. 556 is okay. This is 1150. Ordinary share capital 515. Unless we typed something wrong somewhere, I think we look fine. Trade payable is 71. Anything we may have typed wrongly?
At the trade receivable stock, your opening balance should be 625 and not 629.
620?
At the trade receivables, yes.
625.
Yes.
Yeah, and that was the difference anyway. If you do that, 625 opening, and therefore we are saying what would be the trade receivable, then this would be 625, 825. Should change the balance, and therefore what the figure now, 335. What the balancing figure, 335. What to the balancing figure? I think typing is was it 3? Is that the one we did? This was 625.
Undo, so it's row 15 that you need to adjust.
Which one do I need to adjust?
E15.
Which one? Here?
E15, your working capital.
Working capital?
Yes, row E15.
I adjust which figure?
The 339 to 335, I think.
3352?
339, it should be 335 most. Do docs, yes, it should be 335 and your opening balance should be 625.
625.
Yes.
So if I make that, would that be the figure? So this is 335, and that should be the one which should go to this one.
No, not
Is
to
it
that one, to your E15 line row.
To?
E15.
Oh, to this one.
Yes.
Yeah, to this one. Yeah, I was changing the wrong one. Yeah.
Mm-hmm.
Sorry, I think we struggled a bit, but that's how sometimes it works. Yeah. So I said that before, I know this one should be -9 and should be -9. So I was changing the wrong one, not the 360, should be the 335 there. So what we have learned, just transfer the correct amount. If you take the wrong amount, you can see what it will cost you. And you must always remember, like the proceed is what we record, the amount of cash that we received, which is the sale of PPE was 360, not 450. And in the end now, you can see that we have put the title there. We have put everything in practice, and then in the end, we have the balancing figure. So what I'm just saying, in an exam, set the structure. Of course, sometimes you make an error. If you have time, you go back. If you don't have, you can check a few just to confirm. Like there, I would have failed because of transferring the wrong amount on the 339 here. And then here I would have failed by the 450. But most of the others, because I would have checked it. If I don't check, I'll still get substantial amount of the marks in it there.